That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
Hello and welcome to another hour of some of the most important conversation that is emanating from any electronic device today. Because this, my friends, is your life on the radio. This is the fuel for your existence that we're talking about. We are trying to help you improve your life by making the money part of it easier on you so that you can make more money too. 855-TALK is our number, 855-935-8255. Give us a call. You also get a copy of my easy-to-read book, Financial Physics, for free if you call and ask a question.
And if you're unable to hear today's entire show, listen to the podcast. Very popular. It's available basically anywhere, right? I mean,
anywhere.
I was in Dairy Queen the other day. They started playing it for me. So it's right there. It's out in the public, wherever you can take advantage of that.
Right.
Yeah.
But you should probably listen and subscribe and tell your friends to listen on Apple Podcasts.
Oh, okay.
Because they're like the behemoth in the industry. And you really help us out if you listen, and particularly if you subscribe. Please subscribe at Apple Podcasts. Even if you never listen, just go there and subscribe anyway, because it boosts our ratings, it boosts our rankings, and we get more people to listen. And that really helps a lot of people.
You don't get a dilly bar, but that's okay. All right, fine. Good enough.
No dilly bars?
No, not if you do it at Apple. Dairy Queen, yeah. Dilly bar, yeah.
All right. 855-935-TALK. They have Dairy Queen podcasts?
If you listen more carefully to what I just said, you'd understand.
Well, I know you said it was there,
right,
but
let's just go to the phones and your
Brian,
confusion. You're still stuck in the 20s somewhere, not the 2020s. Anyway, Brian, how are you? Thanks for joining the show. How can we help you?
Hey, guys, pretty good. Just wanted to talk about two properties that I own with my wife, and we bought a house in 2001, and we rented out. And we want to go back to that house, but we live in a house up in Auburn, Lakeland Hills. We want to get back to the other property so we can capture our capital gains without having to pay taxes. You know what I mean? We want to go back to it, rent out the other one. What's the requirement for going back to the other property? Can we split our time between the two and have more in the one property where we want?
You can only have one primary residence that you use to take your capital gains exemption.
The one-time exemption is what you're talking about.
Yeah, is that what you're talking about?
Exactly, but how can I get back to the other property and not have to pay taxes if I make that my primary residence and let the other one be rented for a couple of years? You have to have 2 out of 5 years, right?
2 out of 5, yes.
Yeah, that's right.
So if I go back to the other property and we rent the other one out and stay there for 2 more years at the old property, we could sell it and not have to worry about capital gains tax.
Correct, but now
appropriate?
the property that you moved out of, that now becomes an investment property subject to capital gains taxes.
But can I move back into that after I sell the other house?
Nope, it's only a one-time deal.
You can move back there, but you can't get the break. That's only a one shot.
So is there anything you can do with that property besides make it an investment property to make it sort of a, I don't know like people do with their investment of money that they might take and use it in like an annuity of some kind? Is there anything you can do with that property? A lot of people have shelters of taxes for their properties or whatever real estate they own.
Not that I'm aware of. The only thing you can do would be a 1031 exchange.
Yeah.
1035 is for an annuity. 1031 is you could that other house you could then get another house similar and defer your gain, but eventually you can only take there's one time in life that you can take a capital gains exemption where the capital gain doesn't ever have to be paid.
That's only for
one time. For a primary residence.
Correct.
There is no way that I am aware of to legally avoid paying capital gains on a house that you own. Now, could you somehow find some accountant who wants to create some complex tax shelter that's going to cost you probably more than you'll ever pay in taxes? Sure, it's possible.
I'm going to tell you the same thing I tell my wife when I see her watching the Murder Channel. You'll never get away with it. I mean, that's, so, I wouldn't recommend that. I think that, I kind of like your strategy. Go back to the other one where the bigger gain probably is and get your exemption from that
right
one.
there, yeah.
I think that's a good strategy.
Yeah, because I think the newer property, we haven't got that much invested into it yet. We're just paying on it. But the other one, we're almost paid off, and it would be a lot more greater gain there, I think. So,
yeah, you want to figure out whichever one is going to be the greater gain. You want to exempt that because married couples get up to a $500,000 exemption.
That's right.
So, you could just consider that and understand that one of the costs of making money in this country is paying taxes on it.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK is our number, 855-935-8255. Give us a call. We'll talk about money issues with you. And sometimes, always, I shouldn't say sometimes, tax issues are the most confusing. And Tom and I don't deal with these on a daily basis. We get them once in a blue moon. The Tax Act of 97 changed the exemption on capital gains. You can now take exemptions on capital gains on a primary residence every 2 years, but they can't have been converted to rental property.
Can't go back and forth. I want to make sure we give credit to Rajiv Nagayach, who's on after us, for giving me that answer, by the way. Thank you, Rajiv, for that. So,
But I'm reading the IRS website right now, topic number 701. You have to have lived in the house at least 2 years out of the 5 years prior to its date of sale. You can sell another house, but it's again subject to that same rule, and you can only do one every 2 years. So it's not a one-time lifetime anymore.
You get the total. You know what?
That's what it says on the IRS website.
One day, I'm hoping I don't have to do a 163-page tax return.
Oh,
it's just, it's honestly,
every time I print that thing out, I go, what is wrong with
come
this
on.
picture?
My life is not that complicated.
It's because you own a small business.
I know, but that, really? 160, it just does not make sense. So, whatever happened, weren't they going to do like a postcard or something?
Yeah, I printed one up right here. Here we got the, this is the postcard form.
163-page postcard. Well,
Dear
listen.
Uncle Sam, I don't owe you anything.
Exactly.
Thanks for asking, though.
Appreciate it.
Yeah, that'll work.
So we lost we lost James. Anyway, so the phones lines are open. I don't know what happened. We started talking about taxes and people moved on.
Oh, gosh.
855-935-TALK is our number. But
it's nice to have friends out there in the legal and accounting businesses who help us out once in a while. And
I agree.
And we hope that you will do that too, that you will help us out once in a while. If you have some information you'd like to share, 855-935-TALK. Also remember, not only can you call that number during the show when we're live, which we are sometimes and other times not during the football season, you can call that number 24 hours a day, 7 days a week, and leave your question, and I'll put it on the weekday podcasts.
That's a very popular feature, by the way. People love
really
those.
Is like
one a day.
Yeah. So
never get enough of Don McDonald. You need him every day.
Yeah. Well,
sorry.
People used to have me 5 days a week.
3 hours a day, right, or something, whatever it was. It was a lot. Isn't it 3 hours a day?
Did you just write that whole thing?
I think that was by accident.
I was going to say, you wrote me this really long text message.
Don't read it.
I don't know what that means.
I don't know.
All right, I was just checking it out. Just wanted to be sure.
Listen, one of the things that I wanted to get to on the show today, because this comes up pretty regularly. We haven't got a lot of calls about it lately because I don't think there's been a new hot thing in this area for a while. I could be wrong because I don't pay close attention to it. But this whole aspect of you can get rich from home by doing blank. In my day, it was like stuffing envelopes or something. I don't remember. Anyway, but the multi-level business, you don't hear as much about Amway today. I'm sure there's other people out there, right, that are, but...
I mean, remember the whole thing with Ackman?
That's right,
hedge fund manager?
That's right.
And Herbalife?
Yeah, which, remember they had the lawsuit over because they said it was a Ponzi scheme, et cetera, et cetera, et cetera. And there's a new one in the news because I think the Federal Trade Commission said this really wasn't so much about, the product as it was about getting people in your downline and getting them to pay the $60 to join. And then they looked at I find it fascinating because if you think you're going to get rich doing this kind of thing, go read how many people actually get rich. The people that actually get rich is a very small number. In fact, the number is shocking. That article you sent me, Don, that showed the number of people that makes nothing.
Was that the Advocare?
Yeah, that make nothing is a very high number. The people that make up to like $250 is, like 15%. And then there's like 1 or 2% that make really anything more than the money they put into it. Tom's
tiny. Talking about Advocare. Advocare, which is a energy supplement, vitamin, sports kind of thing. They just settled with the SEC for a whole bunch of money. Was it the SEC or
the Federal Trade Commission?
I'm sorry, the FTC.
Correct,
Federal Trade Commission for a whole bunch of money.
Yeah.
And
but the study was interesting because you don't often read the other side of this business. In other words, how much do people actually make doing multi-level program?
They don't.
Yeah.
They don't make anything. And by the way, I want to share this with all of you. There is a show on Showtime that is
I'm going to binge watch this tonight because I think
produced by Kirsten Dunst.
Yeah.
And she's also in it.
Yeah.
It's kind of near and dear to my heart.
Sure.
It's set in the 90s in Central Florida, in the Orlando area, which was the hotbed of Amway back then.
Yeah.
And it's called On Becoming a God in Central Florida.
Tell me what you're thinking. Never one have judged me. All the stinker thinkers who try to tell me that this whole thing was a scam. I'm thinking of their faces, and they realize, they're about to see what a winner looks like.
Dream a big dream. Success is in your blood, fella.
Are you gonna stay in your J.O.B.? Are you gonna embrace your destiny?
Yeah.
If you follow my system, the Garbo system.
This is Garbo country, and I'm a Garbo man.
You're going to be living the A-list, 6-star, jet-set lifestyle that everyone wants.
Who's calling?
In a world where one man stands alone. Yeah, I get it. I like the laugh.
And this one's about FAM. F-A-M.
Yeah.
Kind of sounds a little like Amway.
Mm-hmm.
And they have products for everything you could possibly do in your home. Only problem is you got to buy the products to become a distributor, and they sit in your garage. This show is weird. Okay, I want to just tell you it's weird.
All right.
It's unique, but it's brilliant in many ways. And Kirsten Dunst is awesome. I don't often do TV reviews, but if you want to see
how many
the dark
stars?
side of
How many stars?
Multi-level. This one for me is like it's definitely a thumbs up. I'm giving it
how
2
many
thumbs
stars?
up. I'm going to give it 2 thumbs up. I'm going to give it 4.5 stars.
Out of 5?
Out of 5. Because
wow.
I think that it lost half a star just because of the strange way one of the characters died.
On becoming a god in Central Florida. I thought that was just if you could read a ballot to somebody there or something, but that might not be as funny.
No.
Okay.
No, it's
or
about
fill out a ballot
multi-level
or something.
It's about multi-level marketing,
Yeah.
and it's really, boy, does it nail it. Ooh.
So if you really want to be successful in the multi-level thing,
you won't be.
You got to be the first. You got to be the first person.
Yeah,
really, essentially, because you got to sell. What they pointed out from this latest one was the real money was made getting people to write a $60 check to become a distributor. Mm-hmm. That's where the money was made.
And not to throw it into the same bucket, but I read recently how Costco makes the bulk of their money.
Guess what?
It's not selling product. It's off the membership fees.
Yeah, and we ran that number once a few years ago. No, this is serious actually, and I love Costco. You know that. We'll talk more about this on the other side of break. How much do you need to spend at Costco to make it make sense for you to pay them $60 a year to shop there? We'll talk about that in a minute. Yep, we ran the number.
You have the number?
Yep.
Wow, that'll be interesting to find out. 855-935-TALK. 855-935-8255 is the number. Give us a call if you got a financial question, and you get a copy of Financial Physics, the book.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
That number again to be a part of the show 24 hours a day, 7 days a week, or live right now, is 855-935-TALK, 855-935-8255. But I guess I should tell you when right now is, in case you're listening to the podcast, which gets very confusing. We're on live from noon to 2 on Saturdays when not preempted by football on Como News Radio, and then anytime on the internet.
And if
Did
you
I do that right?
Yeah, I want to go back to the phones, but just very quickly, because we had, I don't think we did it on the show, but somebody had asked us because there was a couple in their 60s, they were Costco members, and they said it doesn't make sense. Now remember, you get 2% cash back, right?
Right.
And the membership, I think, is $60 now?
I just auto-renewed mine,
yeah.
and I didn't even look at what it cost.
And then somebody analyzed it based on the savings. I mean, I think Costco, it's one of those things that's cool. I want to be a Costco member because I love shopping there. It's cool, blah, blah, blah.
I do too.
But we ran the number. It's about $2,400 a year you need to spend.
Oh, yeah,
to make it
$60
worthwhile.
for the Gold Star member.
To get your, it's so, and are you really spending that much? I doubt it. Now we do because we have a business that we shop for.
I'm an executive Gold Star at 120.
You're need a lot more, so it doesn't make sense. Anyway, let's go back to the phones. I'm not picking on Costco. I love the company.
No, we like Costco.
So
I just thought it was funny. We're talking about how it's the $60.
Yep, that's right.
The $60 payments. That's how you make your money. It's that monthly.
The subscription services. If you hadn't noticed, that's where the real money is now.
Yeah, that's where Amazon makes all their money, on the Prime membership.
That's right. Yep. So, let's go to the phones. Hi, Ted. How are you?
Oh, hi. How are you doing?
Great. How can we help you?
I followed you guys for years, and also when you had the radio program with Paul Merriman. And also, I've been a Bob Brinker fan for years. I had a question. If you could comment on bond yield versus performance in relationship to, if you don't really need the income, if you're not relying on income for bonds, and I could tell you my summary of my situation.
Well, go ahead. I mean, because that's what it comes down to, right?
I need to put it in context.
Okay. So I'll be 68. I retired from Boeing about 5 years ago, so I'm getting a moderate Boeing pension.
Yep.
My wife retired from the school district about 22 years, so she'll get a moderate pension. I'm waiting till 70 to take Social Security. My wife will be 66 in March, so she'll take Social Security at her full retirement age. I just found out that I can do a restricted application. And when she files, I can get half her monthly income until I turn 70.
You're born before January 1st, 1954?
Yes.
Okay, just checking.
We had somebody he snuck in just under the deadline.
Because we just had somebody in the office who missed it by 12 days. I felt kind of bad. Yeah. It's like, well, they just drew a line.
Yeah,
Go ahead.
I was born in 1951.
All right.
So, I did very good in the Boeing 401k. I transferred. I have all the money in Vanguard.
Yep.
I have just south of $3 million between my IRA. My wife has a moderate inherited IRA. We have
you're in
a
good
couple
shape.
Roths.
What's your question?
And so the question is, when we get going, when we're getting 2 pensions, 2 Social Securities, and right now in my bonds, I have pretty much in the Vanguard Total Bond Market Index, which is the VBTLX.
Yes, we know the fund. Go
ahead.
And
have some also between the double line total return, which is DLTNX, which is...
We'd hit the zapper on that one, but go ahead. Yep.
Yeah. So if a person, I look at the Vanguard bond funds, you look at long-term bond funds. And right now, bond funds you look at performance is pretty high on a lot of these funds versus yield. So I never hear anybody talking about going into long-term bond funds.
No. Okay.
We're going to get you to hold on.
I know where you're going now, Ted, and I'm going to, hold. No, actually, I can explain this really quickly. Bonds are not supposed to be a money-making part of your portfolio. You should not be looking at bond total returns or even bond yield. Bonds are designed to anchor your portfolio, and long-term bonds don't do that well because long-term bonds can be equity volatile. Avoid long-term bonds. Only have short intermediates in your
Tom
portfolio.
and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
Welcome back to the show. I'm Don McDonald. That's Tom Cock. This is Talking Real Money. We want to help you understand money better and make more of it.
And
but
so
not
many of you,
quickly or easily.
I mean, so many of you struggle with the benefit of a particular type of security. I'll put it that way. Mm-hmm. Stocks, because
Minutia, though.
You're investing in companies. Right? I mean, that's what you're doing.
Yes.
And we believe you should be widely diversified, own, in some cases, if you can, 13,000. If you go do it on your own at Vanguard, you can own 8,800 securities globally. That should be where you're trying to make the money. Right?
In the stock market.
In the
Correct.
stock market. Conversely, bonds, new survey out, shows that only 8% of you can accurately describe what a bond is, especially when you get into particular types of bonds. A bond is an IOU, right? I mean, it is a security issued by a government or a corporation that says, I will pay you back in this period of time at this interest rate. Mm-hmm. There should be less risk to that, right? Because you have some assumed sort of guarantee that you're going to get your money back. There is none of that guarantee in stocks. In fact, quite the opposite. Many times companies go out of business. We don't know why. Or many times the stock does nothing for a long period of time or goes down dramatically, et cetera, et cetera. So when you ask us, and we get this question regularly, it's kind of what I think Ted was getting to, why are, and it hasn't been true this year, by the way, but why are my stocks making a lot of money and my bonds are not making money? What's wrong with my portfolio? We think you're looking at it incorrectly. By the way, I think Larry Swedroe wrote the best book on bonds. You want to go read about Get Into Bonds. That's a terrific book.
Yeah, wasn't that on human bondage?
Just something like that,
book.
On the other channel. But the thing is that what you need to know is bonds should be the
50
bedrock.
Shades of fixed income?
Oh, I like that. The bonds should be the bedrock of your portfolio where the stocks are trying to make you money. In Ted's case, they got the 2 pensions. They got 2 Social Securities. He's got $3 million in his retirement accounts. He should not, in my mind, be taking very much risk with his money because he doesn't need to take risk. If you haven't saved money for retirement, you don't have pensions, all that, then maybe you need to take more risk to make up for lost potentially. But you need to know.
That Ted was doing too. He was getting caught
conflating.
Up in what's going on right now. For example, bonds have actually done really well this year.
Huge.
Because interest rates have done something that everybody, all the experts said they couldn't do.
Yep.
They all said bond yields can't go any lower. Oops, they did. So bonds have actually had a decent return.
A decent return? The Vanguard total bond is up 8.6% year to date. That's better than decent.
But don't look at that. I guess
no,
that's
I'm
what
just
trying to
saying.
say.
No, I agree, but don't say decent. It's been well above average. Let's put it that way. I didn't mean to beat you down. I mean, keep going. It's okay.
No,
that's it. This is the first, ladies and gentlemen. Usually the beatings go the other direction.
Criticism. Heartless criticism.
Okay, they've had a good year while stocks have had a good year.
I want people, and Ted and everyone else listening, I want all of you to please do me a favor. Quit getting caught up in the today of your investments or the recent past of your investments. They don't mean a thing. And with bonds, your expectation going forward, maybe this will answer the question better.
Yeah.
Your expectation for bonds should always be, I'm going to make the yield. That's all I'm going to get.
And that was what he was asking. Why is the yield 2? and the
And
bond
the total
fund is
return
up 8%. Why would that be?
You shouldn't look at the total return for bonds because the only appreciation you get in bonds is due to falling interest rates. Bond prices rise. It's a real simple formula. Bond prices rise when interest rates fall. Bond prices fall when interest rates rise. They move opposite of the direction of interest rates. It's very, very simple. We're not going to get into all the other things. We're just talking about government bonds, not corporate bonds, because corporate bonds, you add another component of how risky the company is.
Correct.
With government bonds, it's a simple formula. If interest rates have gone down, bond prices have gone up.
And by the way, you can own mutual funds that don't always follow that philosophy. Now, he mentioned DoubleLine. The guy who runs that does all bunch of fancy stuff in it, tries to anticipate what is going to happen with interest rates, tries to look at interest rate differences between here and Europe, for example, and play on that to make additional money. We do not believe in that philosophy, nor do we believe, because what he's trying to do is like what a stock picker does, outsmart the market and make more.
How much does DoubleLine charge for that total return bond?
Go ahead. How much is it?
0.75% a year.
Where you can go get the Vanguard total bond fund for
0.05%.
Yeah, you decide. 5 basis points. You decide.
855-935-TALK. We've got time. We've got books for you if you call and ask a question on the show.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
We're all about all the money matters that matter most to you. I am Don McDonald. That guy over there is Tom Cock. Thank you for being where you are, listening to the show every Saturday, and hopefully listening to the podcast at TalkingRealMoney.com or on Apple Podcasts or Spotify or all those things. We're on all those.
Spotify still around?
Spotify's huge.
You don't
it's
hear
the
much
second
about
largest.
You don't hear much
They're the
about
second largest spot for our podcast. They're number 2 to Apple Podcasts.
Okay, all right.
Yeah, apparently you don't know much.
Not much.
855-935-TALK. Well, pay back.
Slow burn. I did just listen to that podcast and I loved it. I'll give that a raging endorsement.
I checked out Slow Burn. It was good.
Really
It was good. My favorite, I got to tell you, my favorite podcast, without a doubt, is This American Life. Love Ira Glass.
Never listened to it. Okay.
Listen.
I'll
awesome. Try. Really, really good. 855, but Talking Real Money is the best financial podcast by far.
You had to say that. You had to say that.
We are not getting the credit we deserve yet because people listen too much to these scammy podcasts. Almost all the top podcasts at Apple are like either really bad advice or outright scams.
Well, remember the number one for a while was how to get rich selling stuff at Amazon. That was really awful. So
855-935-TALK is our number, and you can call that 24 hours a day, 7 days a week, and get your questions answered. It's amazing. All right, Steve, you're up. Welcome to Talking Real Money.
Well, thank you for taking the call. I'll try and make this as uncomplicated as possible. I'm 73. My girlfriend is 67. We live together. I'm going to be retired at the end of next year. And when I retire, I will get a pension along with my Social Security, which I'm collecting right now. I'm putting about $500 a month into a deferred compensation plan through work. It goes to T. Rowe Price. I just got my recent statement, and it's worth about $65,000 right now. It's in their target date fund 2020. Right now, it's about 60% stock and 40% bonds, roughly.
Nah, it wouldn't be that high.
No, it's probably a little less, actually.
Yeah, that would be pretty aggressive for somebody who's retired. But go ahead.
Yeah. Well, anyway, when I have to make the required minimum withdrawals when I retire, can I take that money, and is there something I can do with it to provide some income for my girlfriend? Because I'll probably pass away before she does, all things being equal.
Well, okay, does she have earned income?
She has a small Social Security check, about $1,000 a month.
So she's not working?
No.
Okay. because I was thinking maybe you could do a Roth IRA for or something. But, other than that, I don't know.
You can just invest for her.
Well, she could do a non-deductible IRA.
Well, why would you do that?
But he wants to just take the money, put it into something that grows for it. I mean, the problem is
why
then
not
she
just put it into a Vanguard, just the Vanguard mutual fund?
Yeah, because she'll have to take it out. Yeah,
there's not much tax liability. I don't see why, but I would not use T. Rowe Price funds. One, that fund you're in has an expense ratio of 0.6%.
Yeah, that's who my employer is hooked up with.
Yeah, when you're done working there, then I'd move that to an IRA and do something less expensive. But back to your girlfriend for a moment. Now, I think what Don is saying, just open a regular taxable account. Want to leave some money to her, put it in that taxable account, buy inexpensive, widely diversified mutual funds, and get on with it. That there really is no other tax way that she could live off the money sort of without paying tax on it, I guess.
Yeah,
unless you buy an annuity or something.
So much. I just wanted to put it in something that would provide her with some income as opposed to buying life insurance, which is...
This may be, though, Tom, one of the cases where somebody might need an immediate annuity. This might be an immediate annuity would provide her a lifetime of income. It means you give up all the growth potential to the money, but the insurance company will, when you give them X amount of money, they will give her X income every month for the rest of her life.
Can she get one at Vanguard? Can you get one at Vanguard?
I don't know that Vanguard sells immediates. They might.
Trying to think where else to go.
Certainly.
Because, it's a good point, by the way. You'd give them cash, and they would give her some sort of small stipend for a long period of time. They're basically paying you back your money
of her life.
With a small amount of interest. Then she has, I think it's good for a budgetary standpoint. She's got kind of an amount she's getting. That might make sense.
To withdraw it and trying to figure out how long it's going to last her and the like. And by the way, that fund is actually it's shocking for a 2020 portfolio, Tom. That's 56% bonds and the rest in stocks.
That's riskier than I would have thought. Thank you, Steve, for your question. Let's continue to go back to the phones. And Robert joins us here on Talking Real Money.
First-time caller. Appreciate the show very much.
Thank you.
Thanks, Robert.
I have a question. We are about 13 years out from retirement, and so I am a teacher, and I've been paying into our district/state funds. So I built that up. They offer a secondary retirement account, which is a deferred compensation. We are now at a point where I can put a little more money into that, roughly about $1,000, or we now are offered a chance to talk to a financial advisor. And the person was suggesting an item called, it's through Alliance Life Pro Plus Advantage.
No.
Okay.
No.
And your school
district is so confused. Oh.
Right.
No, just
Allianz.
9%.
How much?
Go ahead.
Allianz is an insurance company. This is an annuity.
Right, correct. And through my district, I've done pretty well. My return has been about 9%.
That's very good.
And so, and so then they said, here's a financial advisor you can talk to. It's offered. And I figured, okay, talk to them. And it just kind of smelled funny.
Well, here's the thing. This is the reason that about 70% of money that's held for teachers, as Don pointed out earlier, and nurses, etc., is in annuities, because they allow you to go talk to somebody like this who tells you, here's an easy way. No, you should keep doing the deferred comp. They have the state has a very good deferred comp plan, by the way. And which retirement plan are you in through the state of Washington, 2 or 3?
I'm in 3.
Okay, I like 2 better. But anyway, I mean, the point of the matter is, no, you don't need the annuity.
No, and let me I gotta add this. I just have to add this. That moniker, financial advisor, has no legal definition. Any idiot can call themselves a financial advisor. Any idiot, including insurance salespeople, some of the bigger idiots in the industry, in my opinion. It is, and whoever this person is an insurance salesperson. They are selling insurance products. And by the way, insurance products do not have absolutely no place inside any tax deferred vehicle.
Yeah.
Period.
You already have tax. You're paying for the tax deferral. But here's the other thing to think about. You already have a couple of annuities. One's called Social Security. Right. The other is called your state annuity, the pension you're going to be getting. Why do you, anyway, thank you for your call.
Anyway, yeah.
Keep
so
saving in the deferred
tell that
comp,
financial advisor to go fly a kite.
Bad advice.
Remember, you can call us 24 hours a day, 7 days a week at 855-935-TALK. Just leave your question on our electronic system, and we'll answer it during the podcast, which you can listen to anytime on your favorite podcast service.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And I think this may be my last chance, because we're going to be preempted, to tell you about two great small group classes being taught by our very own Barb Devereaux. One is called Female Financial Fundamentals, and that's as a lunch ed on a Wednesday. The other is Health and Long-Term Care Questions, and that's going to be a brunch ed on a Saturday. The tickets for these are selling out fast. As a matter of fact, the lunch ed is almost sold out. There are only a couple of seats left. So if you would like to attend one of these events where you get fed and educated, you need to go check them out now at TalkingRealMoney.com. Get those tickets before they sell out. TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.